All right, welcome back to another weekly trade review. We are reviewing the week of February 2, February 2 to what's that, 6 or 7? We're reviewing February 2 to 7. It was an interesting trading week. We're going to look at how we could have leveraged the week's trades or the movement, the volatility in the market to see how we could maximize our trades. Right, so you could see from the week before that, so not the week that we're in now, but the previous week, which would have been the week of the 26th to the 31st, you would have seen where the market came down, pulled back, came down, pulled back, and did almost a double bottom, but it didn't break this low, but it did create a lower low, right? And remember how we do the breaks. A break is actually a full candle being formed below the body of the lowest part. So what that would look like in this case was, if for this to be considered a lower low here, if there was another candle that was formed fully below the body of this candle here, this lowest candle here, or the bearish candle here, it would have been considered a break, but that never happened, right? So as you can see, the market came here, came down, pulled back, pushed down again, tested here, pulled back. Now we are waiting to see what the market is going to do. Is the market going to continue bearish, to probably pull below, test, continue to fall? Is the market going to push up to this area here, or even this area here, and then fully retrace and then pull back? I don't know. Is the market going to push up, come back and test, and continue? We don't know. So we have to, I guess, observe to see what is going on. But as you can see, this here that we just pulled from this is clearly a bearish trend, right? Lower highs, lower lows, lower highs, lower lows, lower highs equal low, but we don't know where it's going next, right? So let's start this test. So the opening candle tested this high with this little wick resistance. Not enough for me to consider that the market may be pulling back. We need a lot more validation to say whether or not this is an actual area that we should be interested in or not interested in. But you can clearly see that it is testing this area here. It is resisting the move, so this is a nice resistance area. Cool. Next candle is a bearish candle, also a wick resistance going up, meaning the market is saying maybe I'm not sure I want to go up, but with this long bullish candle, I'm not sure. So what I would want to do is go on a smaller time frame to see what it is showing. Now, of course, for me that would mean going on the M4, the M5, and testing. So we can see that there was a double top formation here, came back, tested this area, and pulled back. So if I was trading from the M5, I would have probably tried to jump into a trade here. But I'm not trading from the M5, so I need to wait for either a retest of, this area, come down, continue, right? And I will take the trade here, or when it retests this area right here, or if this just continues to fall and then pushes up and continue, that is an option. The market could also actually pull all the way back up here, pull all the way back up to the top. But if it does that, I would probably want to see a next double top before I enter, to confirm that the market is getting ready to pull back. So let me put something here just in case. And one right here. Let's see what the market shows us. All right. Okay. Wow. Wow. All right. Now, ideally, you'd want to enter here, right? Because you think that this long candle is um, a bearish enough candle for you to enter. But I prefer break and retest. So even with this candle, the market would need to pull back a little, give me a bullish candle, and then continue. This strong candle is not enough just to say take it and move on. I need something else to confirm. Yes, it did break below, so I need a confirmation that it is really breaking on the M5 specifically. All right, so it's pulling back. It's pulling back. All right, it came back, tested there. What is it gonna do? All right, not ready to move yet. Still not ready to move. As you can see, it is pulling back into the area. This is looking interesting. Now, all I'm doing is trying to see where is the market trying to go. See if it's testing any of the areas, because maybe the market wants to continue bearish, but I don't know. I honestly don't know. So we're waiting around. You can see a bit of consolidation, then a bullish move again, but there's slight resistance at the top. Wow. And here's a pin bar, which I could actually take a trade from. Right, I could have taken the trade from this pin bar because this is a good enough confirmation at this same area. Right, and here's a bullish engulfing candle. It did engulf slightly, but there's a long wick, but this pin bar is enough for me to say let us take an entry. Right, let's jump in right here because we are looking for a bearish move. Right, so let me put this in and then I'll write rule number 1 that we need to remember. Oops. Alright, you can see that it started, but yeah, let's start the trade so we can. Alright. Alright, so we're back on we're on the H1. It's easier to follow the trade from. I'm actually gonna go to the H4, and that's where I manage my trades. This should be 30 pips above. State this down, and rule number 1. Trade what you see, not what you want. Trade what you see, not what you want. That's rule number 1. And this is an important rule because one of the things that happened to me this week, actually, I did get this trade, but there are a lot of other trades that I just messed up because I was trading what I wanted, not what I was seeing on the chart. So trade what you see, not what you want. So I'm going to take this and move it over, put it somewhere else so that we can look back at it, because again, we're going to follow the trade from the H4. Now let's see, we're on the H1. Oh, here are the levels, so this is nice. This is very nice. Alright, so let's move forward to see what's going on. Alright, that's a nice push down. Let's jump onto the H4 because we know that that move happened, and we're managing the trade from this time frame. So if I should put my Fibonacci just to get an idea of where I need to exit, as you can see, it's 100% retracement. At this space, I'm probably looking for looking to come out at the 0%, unless I see something very strong here to say let's continue bearish, but that's what we're looking for. Let's see. Oh, here's a strong wick resistance right at the 23.6. This for me is a little concerning because the 23.6 is generally a good pivot point when the market may want to pull back a little. And pull back not necessarily, in this case it would be a reversal. Let's see. Yeah, I think for this reason, this indecision candle here and this strong wick resistance is enough for me to say maybe it is time to come out of the market. Let's come out here. Still a 1 to 3. Let's put this up here. Let's add +1. To simulate this, let's simulate it with a $1,000 account, and we're risking $100 a trade. All right, so here already, this profit would be 1,322. Let's see. We're not there yet, but let's see. So we're out now because of this wick resistance. Let's jump down to the M5 to see what is going on here. Wow. This looks like a nice head and shoulders if you don't see it yet. 1, 2, 3, 4, 5. And now we'll look for a pullback all the way up. That's literally what we would do. Let me highlight this in a different color so I can make sure to go back and look for it. No, I remember the gray. Let's do yellow. Or is that area? Okay. So the question is, do I want to take this counter trend trade? Do I? Because the market is still bearish. I don't know if you realize the market is still bearish, still very bearish. It only becomes bullish if it breaks this high. Right? If it breaks here, it is bullish. It is still very bearish. So what are we gonna do? Let's wait for a bullish confirmation on this time frame. If we get one, then we can decide at that point what we want to do. And I like this. I really do. It's resisting, or there's a support line here on the M5. If anybody can see, it doesn't want to go below this area. Doesn't want to go below this area. So I'm going to take an entry here. Same 1 to 3. Let's see how it plays out. So it started moving off. That would be nice. Let's move off with it. Good. 15 minutes, half an hour. What's going on? We're still good. Oh, yes, we're still good. On the 1 hour time frame, how do we look? As you can see, it went up. I'm not playing it out because I want to go back on the larger time frame so we can see what's going on when we move. My exit, because this is a counter trend, and as you can see, this is on the H1. There's also a resistance area here. The resistance. Is this support? Is this right? Support, resistance, support. Yes, it's a good area actually. Let me see on the M. But I wouldn't have taken a trade here. This has been too big. Okay, that's good. That's good. All right. So, what are we looking at? All right. Indecision. All right. Oh, beautiful. I like this. This have gotten me a little scared, no lies, but I like this. This looks like a spinning top. All right, there's a bit of resistance there. Wow. Oh wait, my bad. Let me go back a little. Should have been on the H4. See? Stick to your trading strategy. Okay, so I guess I got the same thing with this pullback here. Let me go back on the H4. What do I do? Do I come out? Do I stay? Is this wick something at this area too that I want to come out of? No. What I want to do is move my stop loss to break even. This is a counter trend trade. I'm already in profit. And this is not the trade I wanted to get into, but I need a bearish confirmation to come out. The candle alone is not enough. There has to be something else. Right? So as you can see, it did pull back, but it continued further up. So no need to worry just yet. But this spinning top on the H4 is of a concern. That is the real concern, right? That is a concern. That is a big, big concern. So what are we gonna do about that concern? Again, from the trading strategy, we need something else to confirm. Can't just confirm because of the spinning top. We need some kind of bearish confirmation or a bearish candle to say, Brandon, maybe it's time to start looking somewhere else. Right? As you can see, we got a bearish candle. It did test this area, the same area that we highlighted here. It tested this area. Nice, and you can see that it is moving sideways. Sideways, not necessarily a good look. Because of this candle, I'm going to start, I'm going to start looking. Right? So let's come down here. Coming out of this trade here. That's 1 to 1.8, but that's fine. Okay. Now what am I gonna do? Let's jump down to the M5. Oh wow. Wow. You see this? Woo! This is nice. Very nice. So let's look, and you can see this resistance area. You see it? Great. So what am I gonna do when I see this? That it fully engulfed this one. After it tested this area, I'm gonna jump in. Jump back in for my sell, which is the actual trade that we wanted to get into. This is the trade that we wanted to get into, my friends. Right? So I can take off this Fibonacci. It already came back and pulled all the way back to the top. So now I need to find another way of where to exit. So we're going to do this. Right? Wick to wick of the bearish move. See, it came back and it didn't fully test the 78.6, but it properly tested the 61.8. So my TP, we're going to be down to minimum 0. In this case, I like how the negative 27 also relates to the 4-hour support resistance lines. So I'll take it down to there and we'll see how it goes. Oh, beautiful. Maybe there was some news that was going on at that time. I want to bet. You can also see it's eating up this wick. Oh, wonderful. Alright, not enough to come out. Oh, wow. So if it broke through there, where am I looking to take this trade? If that is where it broke through, where am I looking to take this trade? I'd highlighted this area of interest because it was a 61.8% retracement level for the daily. So let's take it to down there at least to see if it goes. And it also aligns closely with the negative 127 area. And then, of course, very close to negative 168. So let's see. Let us see. Alright, still pushing. Still pushing. Is this enough to come out? No, it is not enough to come out because we're in a bearish trend. As you can see, it would have broken this low here, properly broken this low. So when it broke that low, what we'd be looking for, if we come out of this, if we take off this Fibonacci and put on this one, it would be for a retest up to this area. So what I would need to even consider removing the Fibonacci is another candle or a confirmation, a series of candles covering this one, which I highly doubt because of how big this candle is. So let's see. And it broke through there as well. So if it broke through there, where are we exiting? We're still doing our trailing profit because we're not sure. And it broke through there again. Wow. Oh man. Alright. Let's pull it down to the next area to see what happens. Alright, push up. This one engulfed. But with this engulfing, you can see that there's a nice wick resistance on the engulfing. To almost signal that it doesn't want to go up. And when I go on the 1 hour time frame, you can see right here a nice mini support resistance. See it? Nice mini support resistance where it wicked out. Let me see what the next set of candles look like. One, oh, it broke through. And I mean, if I was jumping into another position, I'd have probably come in right here. You know, let's do that because we're already here. We are already here. Taking it down to here still. Let's see. Wow. And it continued further down. All right. All right. All right. Wow. Wow, 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 wow. Now this is a nice wick resistance. I'm getting nervous now because it wicked right at this area. I'm still in this trade. I'm now moving this to break even. Once I move that one to break even, I've moved this one down to this entry point, and I'm watching the trade carefully. All right. All right. I don't know. This is a pattern. I don't know what it is called. I have no idea what the name is. But my next indication is that we're gonna get a bearish candle. And if my indications are actually correct, what I would want to do is jump onto the H1 to see maybe it is forming another area. And it's of course coming down to this area right below there. 1, 2, 3, 4. Alright, let's see what that looks like here. Alright. So this is still another candle. This is an indecision candle. Not worried, not fretting. But again, this is a pattern. I don't know what it is called. 3 candles or 4 candles, and then I'm gonna guess a bearish candle. But because of how this looks after this very massive spinning top and this candle here with the strong wick resistance, I have a very strong wick resistance right at this support line. At this point, I'm going to come out. This is enough for me to come out. Let's draw a line here to show. Yeah. All right, I'm out. Let's move these two to the top as well. See what's fix those after. Okay. Alright, we can delete the area of interest. Whoops. Or should we delete it? Not yet. Let's see what's next. Oh, the week is done. Alright. Oh, and it came back and tested this area as well. So that's fine. That's good. Here's rule number 2 based on what I just saw here. Rule number 2. Do not be anxious. You will leave money on the table, but you will get more. Always. Always, always, always. Right? So the key thing here is knowing when to come out of the trade, knowing when to leave, knowing when to say, yes, this is it. All right, we're going good. Oh, we're finished. The week is finished. So if you had done that and I didn't, if you traded like that, as you can see, I would not have had any losses. I think last week's trade, I did have a few losses too, I think. This one, thankfully, there was none based on the how we traded. That's good. Let's put the things together. If we're risking, again, we're risking $1,000. No, sorry. It's $1,000 account, risking $100 on each trade. Alright, so if you had done that at the end of the week, you would have made, let's see, 12.84 and 33 cents plus this is right? Oh, it is. Plus 2200 plus 1322 plus 1186. You would have made almost $6,000, $5,992.33 at the end of just 1 week. If you had followed those steps that I took to make those trades and reading the market structure, just the raw market structure, you'd have made almost $6,000. I think these two rules are very important to remember. If you can write it down, write it down. If you want to take a screenshot, whatever you want to do. But these two rules here are massively important. Massively important. Massively important. Alright, that is it for this week's trade setups, or trade review, sorry, this week's trade review. What am I looking at for the incoming week? Let's see. Where did the market end up? The daily is still bullish, but these pull down, these pullbacks are getting massive. So it's almost at the 78.6, coming down very close to it, and it ended at a strong resistance. So I'm expecting that it's still gonna continue. Let's mark out some areas. Let's mark out some areas. Areas of concern. I like that one. Let's pull this down a little. Okay. And let's pull that one too. Alright. Okay. Alright, let's do this instead. This is better for right here. Let's not overcomplicate it. That's actually rule number 3, but I'm going through the analysis now too, so I'm not writing it. But the rule number 3 is keep trading simple. Rule numero 4. Keep trading simple. That's good. Is there anything else? No. Alright. Now as you can see, this area here, it's probably better I put this on the H1. It wouldn't be as big. This area here is an area of supply right here. So when I looked at this here, I don't know if it was obvious to you, but it was obvious to me that this was a double bottom, the forming of a double bottom. Should mean I'm expecting the market to pull back, test, and do a mini retracement or a good enough retracement to here, and then from there, market would begin to fall. That's my expectation. And then break through the previous low and continue. That is my expectation. Right? The only way that probably does not happen is if when it gets to this area, it pulls back to that strong area, Is it strong enough? Yeah, it's the only thing. So it may pull back here, that arrow and fall to here. So this is a major area for me, which is 149,300, 299. That's fine. But what I'm looking for at the beginning of the week, actually, I think I'm in a trade right now. I held over the weekend. Let me see. Yeah. So I'm in. Where did I enter? Where did I enter? Alright, so here's an entry here. So I entered here at 163. Entered here at the formation of this double bottom. So I saw this on the H1. Let me move it a little. When I saw this wick on the H1, when I was looking at the market actively, I was like, hey, maybe it is time to go on. I went down to the smaller time frame and I saw this big bullish move and I said, yes, let's enter. So I entered there and I'm in this trade now. Why I'm trading this is to take it from here down to here, actually down to here, and then my exit is actually right there. My exit is at the 61.8 area. There may be a strong exit here as well. As you remember before, this was a pivotal point. Something to note. So I'm going to look out for any movement here. If I see any, I actually would hope, what I would hope that it does this, pull back to there, and then goes up. If the market does this though, then as far as I'm concerned, this is a reversal pattern. Because it tested 38, came back and tested 23.6. That's a reversal pattern for a bullish move. So I would then expect the market not to just push here, but it would push all the way up, breaking this high right here, and then coming down. That would be my expectation if it does that. So let's see how far this goes. If it goes straight up, then that's great. That'll be 270 pips. Again, if this still was a $1,000 account risking $100, that would have been an $1,800 profit one time. Would have been nice. Or is it an $800 profit? Yeah. But yeah, so that would be good. That would be good. But yeah, it would be $800. It's 1 to 8. My bad. Also, I calculated the first thing wrong. Well, it doesn't matter right now. I'll show you the calculations next time better. I misread those things, but for now, yeah, the analysis was still sound. Right, so as you can see, I'm not editing these, I'm keeping them straight. There's no gimmicks or me trying to pretend. This is what the trade is. This is what I'm looking for. You can take it if you want. Maybe at some point I'll do a signal group. This is actually cool. This looks like a next double bottom being formed. I actually do have a second entry. This is like almost like a triangle. My second entry is at 151369, which is actually all right there. I'm skilled, and my stop loss has already been moved to break even of the previous one, which is 163. 163. So that's an 11 pip stop right here. So I mean, I have two entries now, not of the same size, but yes, my exit is still going to be the same. All right, interesting times are ahead. Let's see how this goes for this week. Happy trading, everybody. Let's make some money.